Good morning and thanks so much for tuning into the Trade Setup with me, Niraj Shah. I've kept it to the minimal today because it's a day of a bounce and it's very difficult to predict what could happen to specific pockets. Just that because it's a day of bounce, you will probably see momentum across pockets. So what's the global news flow? I mean, this will look repetitive. S&P 500 futures have bounced back after the index posted the worst day. 10-year Treasury yield has bounced back after hitting one-year lows. Frankly, I would hope for the yields to stay lower. It's great for market mood. But be that as it may, this just shows that the kind of fear that was there, which led to bond buying and yields coming off, is also dissipating a little bit. So that's the second piece. Oil has bounced back. Japanese markets have bounced back. So look at Japan stocks have rebounded after the over 10% after historic losses in trade yesterday and in trade on Friday. So you know what's happening, viewers, is that, yeah, this is what I was saying, 8.89%, quite the mirror image of what happened yesterday. But and don't look at China, because China gains aren't quite depicting what would happen to rest of Asia, because China losses yesterday too were a lot minimal than what happened to rest of Asia, because China is kind of detached from the other financial markets. This is what you need to look at. And ASX, KOSPI, Straits Times, our implied open will also show a bounce back for sure. I mean, I would be surprised if it isn't. It's 174 points, maybe not as much as the losses, but that's to be anticipated, because I think the up moves, if any, or the up moves that come in will be tempered. Now, viewers, just keep in mind that it is a bit unpredictable out there, because there is 2 or 3 things happening, right? There is this whole recession fears in the world, especially in the US, and what could happen there. Somehow I don't think I'm not in that camp, because somehow I feel that the US interest rates at 5.25% leaves the Fed with enough ammo to cut rates and bring the sentiment back, even if there is a slowdown in the US markets. So I don't, or the US economy. So I don't think that is a principal cause, though note after note today is citing that as one of the key reasons. I somehow thought that the yen carry trade and the tech bubble bursting and the Japanese money parked out there getting unwound was probably the principal reason why we had such a abnormal scare in trade yesterday. But I'm a minority. A lot of people believe that yen carry trade was big, but the US recession fear is bigger. These are learned people, so I will not counter too much of that. But I still believe that it was the yen carry trade which was the principal trigger in trade yesterday. And then there, of course, the third one, which is geopolitics and what happens if indeed the geopolitical stress comes into play, Iran, Israel, and the West joining in. So remember, there are too many moving parts right now which could impact the market on any given day. So leverage longs might not necessarily be the best idea. That's what I'm saying first. Now, Victor Schwetz of Macquarie has put out a note wherein he says, and we'll try and bring that up, but Victor Schwetz is saying that does a move like this create a stampede, or is this a buying opportunity? So Victor Schwetz says that although stampedes are inherently unpredictable, we view the current stampede as closer to irrational, thus creating buying rather than selling opportunities. Now, this is a very learned man who's looked at Asian markets, global markets now very, very closely from the Macquarie Group. He says this is a buying opportunity. Mahesh Nandurkar has gone out and said that they want to stay defensive in defensive large caps as well. So that's the other view that is coming in from an India-specific perspective, because remember, in India's case, as I said yesterday, the problem was not just about the contagion, but also about the valuations, because we were sitting at such high valuations that any global reason could bring about a sharp fall. Buy the dips is getting tested seriously. Today, there will be a bit of a rebound from a lot of those beaten down names. That's the question. So what's the trade setup for the day today? Markets will bounce. Could well be a trending day ahead. So watch out the market starting off and then inching higher if indeed the European markets start off positively. So that's the first piece. Let's move on. Secure growth stories and high beta stocks are the best bets if you want to play intraday today. I would reckon that defense will come firmly to the fore. I would reckon that real estate will come to the fore. Autos will come to the fore. Some oil and gas upstream names might come to the fore. So that's the bucket that you want to look at if you're looking at it strictly from an intraday trading perspective. Short covering is very likely, and therefore watch out for the stocks with maximum shorts, which is why I said autos, Reliance, etc. Like I said today, I could sound a bit repetitive, but it's just that kind of a day wherein the tide will rise a little and it will carry multiple boats along with it. Specific stocks, very few today. I mean, Tata Chemicals, optically the numbers look very weak, but remember they're exactly in line with estimates. So don't quite know the quantum of the correction here. Revenues were down 10%. If that doesn't disappoint you, look at the EBITDA performance, look at the PAT performance. Margins at 15.1 versus 24.7, a shabby performance. And PAT down 67% at 190 crores. So these look very, very weak numbers, but it's exactly in line with estimates. And therefore, I'm a bit confused about what's the quantum of reaction we see in Tata Chemicals. If there were no estimates, really, you might have seen the stock fall a lot more. Very strong earnings, but exactly in line with estimates. Triveni Turbine and Deepak Nitrite, also Brigade Enterprises, by the way. So that's the other one. So those three are the ones which came out with a strong number, but in line with estimates again. Don't quite know the extent of a positive reaction. Schneider Electric is one more. We missed out on that, but Schneider Electric is one more which came out with a very strong set of numbers and maybe we'll see a reaction. So keep an eye out for some of these. Sorry if you wanted a lot more stocks from mine today, but I think it would be foolhardy to do that because I think it is about the index moving up at large as opposed to specific stocks. So bear that in mind. Thanks so much for tuning in to the Trade Setup.